You're watching the special report here at XM.com. We'll be having a look at the effects of the coronavirus outbreak on global markets. I'm Christina Marujos. Joining me today is Marios Hadjikyriacos, investment analyst. So the outbreak has been front page news globally for the past few weeks. And even though we haven't had yet a breakthrough or even a confirmed treatment as we speak, it appears that markets had some positive moves lately, given the latest, dare I say, optimistic news that we had on the virus. So do you think we're on the brink of a rush in risk appetite?
We haven't gotten a breakthrough, but the recent news have been quite optimistic. So the big one for me was that the rate of increase in new infections has really slowed down. So it's almost leveling off, which it could be a sign that the drastic measures that the Chinese authorities took over the past couple of weeks, locking down 60 million people, are starting to pay dividends in the sense of containing the spread of the virus. Now, another piece of encouraging news that we got lately was that scientists in China found a way to treat the disease. Not cure it, but treat it in the sense of containing it. Now, the markets already rallied on this, let's say, unconfirmed reports of a treatment. And right now, we're conducting clinical trials of this treatment in Wuhan, China, which is the ground zero of the outbreak. Now, if we were to get some positive news on that, if there was a confirmation the clinical trials were successful and that now we have a treatment for the virus, I think that would really be the catalyst for a major rally in risk appetite. We already saw a taste of that over the past couple of days on the mere suggestion that we might see a treatment coming into play. So I will be watching that very closely, the outcome of those clinical trials. And if we were to get positive news on that front, then the biggest beneficiaries in the markets would probably be the commodity-linked currencies. So the Aussie, the Kiwi, the Canadian dollar, and commodities, obviously, oil, copper, and iron ore, for example. And on the opposite side of the risk spectrum, the biggest losers will probably be the safe haven currencies. So the yen, the Swiss franc, gold even.
However, it's inevitable not to talk about the worst case scenario, let's say, in lack of a better phrase, because the situation is still unfolding. There's a lot of uncertainty going into it. So how do you think markets will respond if this uncertainty continues?
Look, you're absolutely right. The situation is very fluid. Virus specialists and scientists are uncertain how it will actually play out or what the scale of this really is. So the economists don't really know any better. Now, if we were to get, so for example, Wuhan is still in lockdown. Wuhan is a major industrial powerhouse in China. A lot of manufacturing supply chains run through it. So the longer it stays on lockdown, the bigger the damage on the economy will be, not just on China. We recently had reports, for example, that Hyundai in South Korea is suspending its car production because it can no longer get parts delivered from China on time. So this is a global thing. Now, like we said, the longer we stay on lockdown, the more negative, let's say, the outlook. So if Wuhan, for example, stays on lockdown for another month or so, then I would expect, or maybe even a couple of weeks more, then I would expect some risk aversion to creep into the markets again. So as investors start to reassess the scale of this thing. Now, in that case, we'll probably see a continuation of the trends that we saw over the past couple of weeks. Stronger safe havens, weaker commodity currencies. But the caveat I would add to that is that we've already seen all of these moves play out. So the commodity currencies have already sold off quite heavily. The safe havens have gained. So it's arguable how much further we can go from here unless we get some piece of negative news. Now, overall, to tie all of this up, the markets are behaving right now as if the worst is behind us. We saw a mild recovery in risk sentiment. Unless something negative enough happens to change this slightly optimistic narrative, I would expect the mild recovery in risk appetite to continue going forward.
Marios, thank you for joining me today. We'll be on the lookout for any developments in this story. And thank you for watching the special report here at XM.com.